want to follow up here because a couple of points have been made. This hearing is really about a number of things, but one of them is that, and Mr. Chappell just made that point, this is an insurance program. But it's an insurance program that's not being run like an insurance program, in that when you look at the industry standards that governments have basically established for people in this kind of business, legislation models of how much leverage is reasonable, and reserves that should be there to protect people. So I think the question is why would there be any argument that if we're going to have an insurance program and the shareholders, the American taxpayers, why we wouldn't run it like an insurance company and have it adhere to the same standards that other insurance companies have to adhere to? Mr. Beerstrom?
I would agree. If you need to run it like an insurance program and price it appropriately, reserve for it appropriately, and capitalize it appropriately, then you would have a better idea of what your future expected outlook looks like. And that's really from a financial accounting and modeling and actuarial standpoint, that's all we're really suggesting and trying to achieve.
Well, and I think the other issue is I support what the gentleman from New Jersey said about, using GAAP accounting, or I call it accrual accounting, to be able to establish what is the value of the portfolio and what is the potential risk of the portfolio, so that you can price. The other piece of it, of the pricing currently, is the fact that FHA doesn't factor in their operating costs into setting their price, because we appropriate money for that. So at the very least, it would appear to me that if you're that entity should be, at least, if it's not going to pay a dividend, if it doesn't have shareholders, it's going to operate as a nonprofit, it ought to at least then have to factor in the cost of operation. Because it's not so much that we're trying to steer business to the private mortgage insurance companies, but what we're trying to do is find a balance in the marketplace of the total housing finance picture. And while we may be pushing some more business to the PMI companies, the private companies today, unfortunately, still about 90% of the mortgages in this country are still being backed by the American taxpayers. And so it is the policy that we're driving. We continue to, I think, put inhibition or inhibit the ability of the private sector to be into the marketplace today, because this has been brought out that the risk retention issues. But it's not so much the pricing differentiation of the premium, while that's a piece of it, but it's the fact that overall a FHA loan today is a lower cost loan overall because of the fact that it's backed by the federal government. And so and Ms. Bazemore brought this point up, is that when you put the fact that you got Ginnie and FHA together, then the borrowing cost in the capital markets is much less. And so it pushes it automatically, doesn't really, almost to a point where the differentiation in premium maybe is negated by the fact that the overall lower borrowing cost is compensating for any premium differentiation in the marketplace. And so I think one of the things that I would hope as we're moving forward is that we have two responsibilities here. One is to make sure that a program that we have oversight as a government is being run appropriately. And that we take a look at something that's been in place for a number of years without not a lot of changes, and understanding that the world has changed. Back when FHA was originally put in place, there wasn't a lot of securitization going on. Most of the loan sales were individual sales. Now we have securitization. So should we take a look at how that impacts the way we run these businesses? But more importantly, I think for many of us is trying to get back to, and I think Mr. Capiano made a great point earlier, what is the right formula? What is the role of FHA? What is the marketplace for FHA? And then what is the marketplace for the private market to be in there? But we've got to fix kind of all of the pieces, but we can only fix them one at a time. And so as we move forward, I hope that we can have a meaningful dialogue about how we look at the FHA piece. I think there's some room here to shore it up, and I think there's some room here to make sure that that there's not some market distortions there that are driving people to FHA other than the mortgage premium, a mortgage insurance premium that FHA is charging. And I think that's really, hopefully, we heard some very good testimony today, and I look forward to probably having some ongoing dialogue with some of the market participants here, because the ultimate goal here is for all of us to do the right thing. And I'm concerned right now that we're running FHA kind of on an ad hoc basis, and if it had a little better structure, that overall it would be a more sustainable program. We wouldn't have to be having hearings about why you have a negative net worth. Those are not the kind of oversight hearings that we need to be having. We need to be having oversight hearings where things are getting better. And unfortunately, we've been told that things are getting better, but the results have not proven to that fact. And then the other point is that if the fact that we're not using generally accepted accounting practices, we really don't know if we do know whether this entity, what it's actuarially, how sound or is or isn't.